If Wells Fargo is the worst of the big banks, Citigroup is easily the second worst. The problem with Citi is it just doesn't give you much to get excited about. It's not bad, hence why the stock's been flat since early March while the rest of the banks have run. While Citi's headline numbers came in better than expected, when you drill down this quarter, did have some issues, okay? The consumer banking business saw its revenue decline by 5%, including, that's excluding one-time items, down 5%, even as its expenses were up 5%. Kind of the opposite of Bank of America, frankly, where sales were up and expenses were flat. Of course, those expenses went to pay for Citi's attempts to transform itself, so the stock wasn't punished. As new CEO Jane Fraser is still getting the benefit of the doubt, as she should. Putting it all together, Citigroup didn't make much progress, but there were no real setbacks either. So the stock rallied a couple of bucks on those numbers. Still feels like it's trapped in the low 70s, but it's very inexpensive, and it's selling well below its average tangible book. Finally, wow. Shot the lights out, alumni, listen up. That's because I worked at this place. Goldman Sachs reported an incredible blowout today. It was a monster sales and earnings beat. Normally when Goldman crushes the estimates, greeted with skepticism. Oh, it's one time only, can't last. Sure, they did great, but what are they going to do for you next quarter? This time they actually got some credit, with the stock jumping nearly 4%, perhaps because Wall Street's finally learning its lesson. Goldman has made so much money in the last 9 months that even if they didn't make a single penny in the fourth quarter, this would still be their best year in history. Think about that. The best part, even after today's colossal run, the stock is down $15 from its August highs. It sells for just over 10 times earnings. This is still going higher. Plus, given Goldman's recent track record, I wouldn't be at all surprised if they smashed the estimates in 2022, the same way they smashed them in 2021. Solomon's doing a good job. Is the stock a slam dunk? I don't know. You never can say that, but it is good. And I got to tell you, I found myself wondering at one point if I made a mistake leaving Goldman Sachs to start my own hedge fund and then ultimately be on TV. But you know what? I'm happy. Here's the bottom line. The big banks have changed the tone of this entire market. It's clear from these numbers that the economy is in a much better place than we thought it was, and so are these old dog institutions that are learning new tricks.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.